Bandhan Mutual Fund presents MF Corner.
Hello and welcome to this special Mutual Fund Corner YouTube edition. And we've been talking about how markets have run up, especially in India. But is there still some value in some of the pockets? What does it mean when we say value investing versus growth investing? I have with me today Arun Chulani, the founder of First Water Capital, joining in with his take on the same. Arun, thank you so much for joining us today. I wanted to understand what your strategy is when it comes to investing in equity funds. Is it the value way or the growth way or a mix of both?
Thank you so much. It's a real pleasure to be here. Yeah, sure. So effectively for us, it's value plus growth. Essentially, at the very core is value, because you want to get in at a decent price, good companies or decent value, intrinsic valuations at a good bargain price. But you want something to have an unlock on that value. You want either a catalyst or some kind of inflection point. So whether that's the turning the business cycle, or maybe the sector itself is overlooked, but it's experiencing decent growth, or the exogenous factors like China, or even a change in government policy. So you don't want to be just looking around trying to pick up cigar butts, but you want to be, or effectively what we want to be doing is effectively finding good value, but there's some kind of catalyst that will unlock that value. So that in itself is growth. And we're generally looking at the earnings. What is going to have a growth on the earning power?
Okay, so value is the core of your investing strategy. What are some of the segments that you're looking at in the market where you are seeing some value right now? Because everything is run up.
True. I mean, it's a tough market, but India's got an investable universe, or at least we have an investable universe of over 1,500 stocks. And even at the same time, you would say India's in a bull market. The indices at a high PE. But if you're willing to look, you will find sectors and companies that are both experiencing bull market conditions as well as bear market conditions. So even at the same time, because some will be impacted by global situations, by credit, by simple business cycles and overcapacity. So some of the sectors that we still find good value are very much in the commodity chemical space, in the flexible packaging space. And, that way you're able to still find laggards to enter into your portfolio, and hopefully they'll be your next wave of growth situations.
You're right. Actually, chemicals has been one space which has not done well in an otherwise good market. We have seen a lot of issues around destocking, inventory issues, and same with packaging because of oversupply coming in there. That is where you are finding value in some pockets of the market. But Arun, tell me overall, do you think there's still some room for Indian markets to go higher at current valuations? Or do you think we are at peak earnings and it could either stabilize or fall from these levels?
I don't think we're not just looking at the near term. India's going through this huge transition period, whether it's infrastructure, whether it's government spend. Hopefully this will flow into the private capex. So there are a whole bunch of tailwinds, whether it's China +1, minus China, where China itself is trying to reduce capacity. And for us, we don't really see that the near term is in our hands. So that's why we're keeping our eye at the long term. Otherwise, anything we do, for instance, is at a moderate level. We're not just there kind of making stark decisions to move into cash. We're finding, hopefully, that next wave. And I think for us, it's very much, we don't want to start second guessing the near term or the medium term, what's going to happen with the market. We're just running our processes. If we've got good winners, good momentum stocks, we're trying to de-risk them, trim them down, and find that next wave. So for instance, our price to book today is around 1.4, which is pretty reasonable. And our price to earnings is 14. Again, it's because we're able, or hopefully able, to find that next wave of value stocks is how we've been able to reduce our portfolio valuations.
Okay. You mentioned two of the sectors where you do see some value, but they have not done so well. At a point in time, oil and gas, power sector, that was considered a value bet, but now these have run up as well. Do you think there's still more steam left here?
And you mean in oil and gas
Yes.
and so on?
Yes.
It's possible. I mean, we were big beneficiaries on our own set. We found them about 5-6 months ago when they were trading at 3.5, 4 times PE. They were giving pretty decent dividends, and the whole market had run up. And as you said, these guys were very much laggards. So for us, when we redeployed our money into this, we had 3 or 4 elements where we had benefits, whether it's the dividends, the cheap valuations, and the fact that they're large caps. But whether they have steam, again, we're trimming down our positions in this, but we're letting the market play its momentum. So again, on a moderate basis, we're not taking too many, let's say, absolute kind of decisions. We're letting it play out. And should it correct or fall, then at least we've de-risked. And should it be going up, we still have a position in. So we're not, again, we're not looking at this as a long-term play. It's more in terms of a medium-term play where we've de-risked already and we're in these large caps. So should the market fall, then at least you have that kind of large cap mitigation or less risk by being in a bit of a large cap.
Got it. You know, that was about Indian markets. Anywhere you're finding value in the global markets, China, be it some of the other emerging markets?
Again, you know, we're pretty much 100% in India, and this is really our space and domain. So China today is trading at a price to book of 1.2, 1.3, but as mentioned, our portfolio is 1.4, so it's not that much more riskier than China. So we've managed to find China within India. So why do I want to go overseas where I'm at a disadvantage in terms of my expertise or our expertise, and you know, what do I know about the Chinese economy or Chinese stocks? Or I'm not going to be a sector specialist there. I'm not going to be a country specialist. So I think we're pretty much happy in India playing our plays. But of course, you know, in terms of the metrics, you know, we like countries like Indonesia, but to be honest, I don't know too much. But, you know, they're experiencing similar tailwinds in terms of demographics. They've got great resources. They've got great industries, and you know, they are also growing at around 5-6%. But for us, we're pretty much happy in India, and hopefully we'll be continuing in this space.
That's a very honest answer, Arun. Thank you so much for joining us at those insights. So, couple of sectors where you still find some value, and otherwise as well, you continue to focus on India for a longer term period. Thanks a lot. We'll be speaking to you very soon again.
Thank you.
Okay, all right. With that, it's a wrap on this edition of Mutual Fund Corner. Stay tuned for more news and updates.
Bandhan Mutual Fund presents MF Corner.